Alright guys, welcome back to another brand new video, and for today we're going to be going over my top 3 dividend ETFs. I really like ETFs for a variety of reasons, but the main one is diversification. With ETFs, you have the ability to buy into different sectors and industries and just gain overall exposure that you wouldn't with just one single stock. With ETFs, you are just buying into a basket of stocks, and I really love this because this overall lowers your risk. So if you buy an individual stock, you have the risk of it obviously fluctuating up or down. Some bad news can come out and it could tank. With ETFs, that stock could be in there, but you have the whole broad ETF and all the other holdings to kind of hold its weight. So ETFs can be great in your portfolios to just add some supplementation or diversification, lower your risk, or your whole portfolio could be ETFs. So with that being said, we're going to be getting into ETFs that I primarily invest for the dividend. Amongst the dividend community, these 3 are by far the most popular. I personally own 2 of them. So to start, we're going to be talking about the Vanguard High Dividend Yield ETF, otherwise known as VYM. If we look at the 5-year and see how well this ETF has performed, it has performed phenomenally, peaking at around $94 before the whole crash happened. Relatively, this is a very cheap ETF to buy into. If we look at the expense ratio, it is only 0.06%. This is very cheap, and what it means is for every $10,000 you have invested in this fund, only $6 annually gets paid out for expenses just to overall run the whole ETF. Next, if we dive into some of its holdings, we can see its top sector is financials. With financials being at around almost 19%, yeah, it makes it its largest sector type, but don't disregard any of the other sector types. You still have healthcare coming in at 16%, consumer defense at 15%, technology at 11%. So you are backed and supported by all these other types of sectors. With this ETF, you're going to be holding 432 companies. That is a massive amount of companies and lots of exposure into the overall market. If we look into its top 10 holdings, its number 1 holding is Johnson & Johnson at only 3.8%. But just like we were talking about, don't disregard any of the other holdings. You still have Procter & Gamble coming in at 3%, JP Morgan at 2.9%, Intel, Verizon, AT&T, Cisco, Merck, ExxonMobil, Bank of America. These are all a variety of different companies. You have Johnson & Johnson at healthcare, you have Verizon, AT&T, and Intel for tech, JP Morgan, Bank of America for financials. Like, you have so much diversification here. You even have ExxonMobil for gas. Next, we move on to the dividends. Like the title says, this is a high dividend yield ETF, so its current yield is 3.63%. With this fund, you're going to be receiving $2.96 annually with the growth of over 10 years. So if you break this out into quarterly, you're going to be receiving 83 cents, which is a pretty awesome payment to receive. And diving into the history, we can see this history is looking phenomenal. It just seems to be increasing. That is the overall trend. Yeah, it can dip and go down a little bit, especially like we saw back in 2008 right here. But throughout this downturn we're currently in, it has not been suspended or cut yet. So thankfully, you still have that reliable dividend with the trend line increasing. For me personally, I hold VYM, and this is a very popular ETF discussed amongst the dividend community that I find on Reddit. Alright, for number 2, we have the Invesco S&P 500 High Dividend Low Volatility ETF, ticker symbol known as SPHD. This ETF is very popular amongst the dividend community. It has a lot of reasons for its attractiveness, but personally, I think it has a lot of flaws that we'll be getting into. If we look at the 5-year graph, we can see that it has steadily grown, but because this is a low volatility ETF, don't expect super high returns. 5 years ago in 2015, it was at $32, and we're barely at $33 now. Before the whole crash happened, it peaked at $43. So I wouldn't expect a whole lot of growth in this. Whether you see this low volatility as an advantage or disadvantage, that's up to you. It could personally be seen as a way to reduce your risk because you don't have to deal with such volatility, but it could be a disadvantage because you're not going to be seeing any appreciation. Next, we have the expense ratio at 0.3%. So compared to VYM at 0.06%, which was $6 for every $10,000, this one's going to be $30 for every $10,000. A major increase in the expense compared to VYM. So with this being more expensive, yeah, this can be seen as another disadvantage. Alright, if we get into some of the holdings, we can see its top sector is real estate, coming in at almost 20%. I gotta say, I'm not a huge fan that real estate is such a huge part of the portfolio. Considering the downturn we're in right now and a lot of the crisis and people not being employed, I would like to see real estate not be this high. But the reason making this so low volatility is technology coming in at around 2.5%. As we know, technology is the big boom of the decade, and keeping technology low in this portfolio is what gives it that low volatility. Moving into its top holdings, we can see Williams Company at 3% as the top holding. I'm not a super big fan of the top 10 holdings here. You do get some decent ones like AT&T, Philip Morris, Dominion Energy, IBM, but overall I think you could kind of move some things around in this fund and really try to bring this real estate sector down a little bit. In this fund, you are going to be receiving 51 companies, which is still quite a bit of companies to own in just one fund. This is again going to give you broad exposure and great diversity. But if we move on to dividends, we can see this is by far the main attractive reason people flock to SPHD. With a solid yield of 5.47%, this is going to pay you out $1.85 annually at 15 cents a month. This fund does have some solid growth around 7 years so far, but this 15 cents a month really adds up, especially at a price of $33. If you can just keep stacking on shares on shares on shares and just acquire new shares every month, you're going to be seeing this monthly payment grow. Again, this is a low volatility fund, so yes, the trend line is overall growing, but it's not growing by a large amount, so you don't need to really worry about the volatility. Personally, for me, I do own 3 shares of SPHD so far. I keep them relatively low. I would actually like to acquire maybe up to 5 shares total. By far, number 1 is going to be the Schwab US Dividend Equity ETF. This is a great fund for only $53. There's a variety of reasons why this is by far my favorite fund. But if we start looking at the 5-year track record, we can see again phenomenal growth just like VYM, and the expense ratio also again at 0.06%, just like VYM. So again, this is $6 for every $10,000 you have invested. If we move into the holdings, you can see financials make up almost a quarter of the whole fund. Again, how you look at that, that could be a disadvantage or advantage depending how you want to just create your overall portfolio. But you do have large holdings in industrials, technology, and consumer defense. Unlike SPHD, I am very attracted to the top 10 holdings within this fund. At number 1, you have UPS, but you have some great companies in here. You have Qualcomm, which is an up-and-coming 5G player, also paired with Apple. You have Pepsi, BlackRock, Texas Instruments, 3M, Verizon, Altria, IBM, and Coca-Cola, Warren Buffett's favorite. With a great position of 104 holdings in here, for only $53, this is an amazing fund. Looking into some of its dividends, with the yield at 3.37%, you're going to be receiving $1.84, which is 44 cents quarterly. With dividend growth at around 8 years, you're receiving a quality fund. And if we look at the dividend history, the trend line is positive. So out of the 3 most popular ETFs amongst the dividend community, I would have to say SCHD is by far number 1. You have that low payout ratio, you have a great solid 3% dividend yield, the 5-year track record is looking phenomenal, and the holdings is something that I find to be a big factor. I really am a fan of the top 10 holdings in here. But that is going to be the video, guys. For you seasoned investors, all 3 of these funds you may have actually already heard of, but for the beginner getting into dividend investing, these are 3 solid funds that you can add straight into your portfolio that are relatively cheap. So if you want to see more content like this and just follow around overall portfolio update, which I follow in all my other videos, please consider subscribing, leave a like, and we'll see you guys in the next video.